welcome to Priceline, our pre-budget special in which we ask top-of-the-line economists and policymakers what the economy wants from the budget. We call it Priceline because clearly the economy today wants a halt to the relentless rise in prices. The budget, as the foremost economic and financial statement of the government, pushes interest rates up or down by the size of its deficit. If it spends more than it earns, it borrows heavily from banks, pushes up interest rates. It creates demand faster than the production of goods and thus can also fan inflation. And yes, it also directly pretends at least to impact prices by subsidizing some products like food, fuel and fertilizers. So, what can Budget 2011 do to rein in prices? We kick off this series with one of the country's foremost economists and policymakers, Dr. C Rangarajan. Dr. Rangarajan, welcome, sir.
Thank you.
Well, India's fisc in the past 2 years is one of the biggest creators of inflation, is my charge. In the 30 months since Lehman, the net market borrowing of the government, net borrowing by the government is over 9 lakh crores, 9 trillion rupees. This is more than the total borrowing in the previous 10 years, which is about 8.5 trillion rupees. Is this not inflationary in itself?
Well, in the wake of the international financial crisis, many countries, including India, followed an expansionary fiscal policy. That appeared to be the right thing to do at that time. There is a raging debate in the West, in the advanced countries, whether in the context of the rising debt to GDP ratio, they should follow expansionary fiscal policy further. But we in India have taken a decision. As you know, in 2008-9, the fiscal deficit was 6%. It went up to 6.7% last year, and in the current year, the budgeted level is 5.5%. I'm quite sure that the budget will show that the current year's fiscal deficit is maintained at that level. Therefore, we are on a declining trend as far as the fiscal deficit is concerned. It is true that government expenditures are remaining at a high level, but we need to take into account the fact that we are in the process of a fiscal consolidation. We are trying to bring down the fiscal deficit, and as we move ahead, I'm quite sure that the fiscal deficit will be further brought down, and perhaps in a few years from now, we can reach the FRBM target of 3% of the GDP as far as the government of India is concerned.
So my charge is that, is this fiscal consolidation too little and too late? Now, you know, before the Lehman crisis, we were at 8 to 9% GDP growth, and at that time, we were at 3% of the GDP as fiscal deficit and working our way towards 2.5%. Post-Lehman, our GDP fell below the trend rate of 8% for what, 4 quarters? Then why do we have to take 5 years to come back to 3% fiscal deficit?
No. I think the adjustment of the fiscal deficit is much harder. If you look at in the past also, it has taken almost 3 to 4 years to come down from 6% of the GDP to 3% of the GDP. Look at the past. I mean, we were at 6% of the GDP almost about 6-7 years ago, and it took us a long period before we can come down to 3% of the GDP. The adjustment, I am afraid, in the case of the fisc is far more difficult. And but the most important thing is to see whether we are on track. Now, you must understand that there are people in the United States and others, very eminent economists, arguing that because the growth rate has not picked up, they should follow an expansionary fiscal policy. But we have taken a policy decision to contain the fiscal deficit, and I am quite sure that if in the course of another 2-3 years we come down to 3% of the GDP, it should be treated as a good record.
Well, sir, would you really say we can go with the US comparison beyond a point? After all, the world holds US dollars as its reserve currency, and therefore there is a compulsion to buy US treasuries. The US can run up a huge deficit, we can't.
No, the U.S. is not even reversing its deficit. The U.S. is still following an expansionary fiscal policy, and in fact the Federal Reserve has put in place very recently a massive asset buying program, and therefore they are not at all in the direction of slowing down the fiscal deficit. But whereas we are, I think the contraction of fiscal deficit by more than 1% in 1 year is a good record.
Yes, so we come out looking good vis-a-vis the US for sure. But don't you think that the US has a kind of leeway?
I'm not comparing it with the United States. I'm saying that the contraction of fiscal deficit by more than 1 or 1.5% a year is very extremely difficult, because expenditures are sticky. To bring them down is not easy, and even, for example, the reduction in the excise duties, which we did in the wake of the financial crisis to push them back to the pre-crisis level, takes 1 or 2 years. Because industry also cannot get adjusted to a reversal of the excise duties sharply. Therefore, I am saying that we must begin a process of fiscal consolidation. In the first few years, the process must be strong, and therefore I believe that if in 2 years we can bring the fiscal deficit by 2 to 2.5%, that should be the goal, and if we accomplish it, that would be a good thing.
I want to take issue with you on whether the fiscal deficit coming down to 5.5% is really such a big achievement. This year, the government had a windfall 1 trillion rupees via spectrum sales and another 50,000 crores via divestment. That together is about 2% of the GDP. Bereft of this, the deficit would pretty much be 6.8%. Don't you think the government is not doing enough on the other side of the balance sheet, trimming expenses?
Well, as we move further, the greater focus will be with respect to expenditures. I believe there can be some step up in the revenues also. The integration of the goods and the services together into one tax framework, even as far as the Government of India is concerned, should give us more revenues. But the time has come to take the bull by the horns and attempt at some serious reduction in some areas of expenditures. I think that is an inescapable reality. Perhaps the budget will show something. We will know it by the end of February.
Coming back to revenues from spectrum and divestment, in 2011-12, that is the coming year, the government won't have that 1.5 lakh crore cushion. Then what levers are available to the government really to get to 4.8%? Let's start with revenues. What really is available for the government in terms of being able to raise revenues to the extent of at least 2% of the GDP?
Now, the process will have to be two-pronged. One is to limit the growth in expenditures, and the other is to raise the revenues. If you are asking me, there is a greater possibility of disinvestment or divestment in the coming year. There is also the possibility of some readjustment of the tax structure, which will also give us a higher level of revenue. More importantly, I believe that as I mentioned earlier, the integration of the goods and the services taxes into a single framework from the even as far as the central government is concerned would bring in more revenue. We really need to widen the tax base, widen the base with respect to the service taxes, and that will, in my view, bring in more revenue. Therefore, the integration of the goods and services together in a single framework, as well as the divestment, are the areas through which we can raise more revenues.
So we had cut back on excise duties post-Lehman and didn't raise them back to the pre-Lehman levels. Do you think there is scope to bring back excise to 14% from 12%?
Well, I would say that the rate should be revised in a manner in which that the tax on the goods and the tax on the services are more or less coordinated. that would pave the way for the introduction of a comprehensive goods and services tax. Whether we go back exactly to the pre-crisis rate, or we adjust the tax structure in a way that the overall revenue that we can get by adjusting the tax rates is more or less in conjunction with what we would have got had those rates been continued through the years.